Deepak Fertilizers joins us now to talk about that. Sailesh, thanks a lot for joining in. Good morning. So just first, addressing the chemical business contraction that you saw quarter on quarter, I understand that this is a seasonally weak quarter for you, but now going ahead in the second half of the year, what is the kind of growth that you're expecting in the chemical business?
Sure. So at the outset, let me just share the good news that the top line has jumped 52% and the bottom line has jumped 195% over the last year. And in fact, the other good news is that H1 has surpassed the whole of last year. So from that perspective, it's a very strong positive kind of traction that is emerging. When we compare the two quarters, you're right. And typically the Q2 is a lean quarter. And this time, because of the aberrations emerging from the unseasonal rains that impacted the chemical sector, and somewhere the excessive rains also impacted the fertilizer sector with a little shift. So what we feel is that, as the year rolls by, this should even out.
So when you say even out, right, your EBIT in the chemical segment has fallen quite a bit. I mean, it's almost 400 crores compared to 730 crores last quarter. That's a steep fall quarter on quarter. So when you say even out, what are you looking at in terms of numbers?
So basically, if one were to compare the aberration, the positive aberration from last year to this year, what has happened is that there has been a huge price hike on the raw material side, and we have been very successful at passing through, and that's how the delta has improved over the last year. But quarter on quarter, what happens is that as the raw material prices, remain and the finished product pricing are somewhat subdued, and also, of course, because of the lean season, the impact that, has come in, both put together, it's like last time what I had also mentioned, that it's a matter of a quarter to settle this gap between the raw material and finished product to make sure that, the deltas revive.
Okay. Hi, Mr. Mehta. Good morning. This is Nigel on this side. We have a lot of these details, with regard to your past quarters numbers. But I want to ask you about your net debt. I'm aware that you're going through with that big capex with regard to backward integration on your ammonia side. But tell us, currently, what is your net debt? At peak levels, what will your net debt look like?
So basically, as you've seen that now, over the quarter and quarter now, our net debt ratios have become even more healthier. And with the, I would say, good returns coming in terms of almost 1,200 crores each year, that has been a strong positive cash contribution. This is something that has brought in very healthy returns, and very healthy financial ratios. So basically, we've already spent over 3,000 crores. And in the coming year, we could be looking at another 1,000 crores in terms of equity infusion.
Right.
And with that, we should be coming to the typical 70-30 ratio.
Okay.
And the revenues from the ammonia plant will kick in by, let's say, May next year.
Okay.
So that will bring in, then the positive aspects that are there.
All right. Mr. Mehta, just to come in out here, you're saying that the ammonia plant, it gets commissioned in May 2024. Are we getting that correct?
Yes.
All right. And you have already spent 3,000 crores. You briefly mentioned that about some equity raise of around 1,000 crores. So will you tap the markets again?
No, this is
what you're already raised. Okay, we got that. So currently, sir, just focusing on the absolute net debt number, what is it at? And at the peak level, what will it go to? I'll tell you why I ask you this. Because the street is a little bit cautious that you're going in for some big capex, which could obviously bear fruit. But they don't want it to get out of hand. So what will be the peak net debt level? 5,000 crores, 6,000 crores? What will it be? Go ahead.
We will be within 1:1 ratio. And that should be the comfort that, we should see.
I don't have the numbers offhand, but if you could tell me 1:1 would be approximately 5,000 crores or 6,000?
Basically, I'm saying, the comfort between the EBIT and the debt ratios is going to be at a very comfortable state. And the key aspect that is there is that, see, as far as the project debt goes, it's already capitalized in the project. After that, we have 2 years of moratorium.
Yes. But, sir, you're not giving us the number, sir. We just want that one number. What can the number be, please?
So debts would be in the range of roughly around 5,000 crores.
Got it.
5,000 crores. All right. Thanks for that. You said that the revenue from the ammonia plant will be coming through very soon as well. You're sitting on, in the first half, your revenue is a little over 5,700 crores. Once this revenue kicks in, then what do you think you could end the year with on the top line? And what is the sustainable growth that you're looking at in FY24?
So basically, as you are aware, that ammonia is a raw material to our downstream. So in a sense, it is not directly going to impact the top line, but certainly it will impact the bottom line. And overall, once the TAN project comes in, which is in 2025, then of course it will have a very positive traction, further traction to the top line and bottom line. So what we are looking at is somewhere, crossing 15,000 crores in the next 2 to 3 year period.
Okay. 15,000 crores top line in the next 2 to 3 year period, right?
Yes.
Okay, and will this include any commissioning of any new projects, or will it be on the existing projects itself?
So there are 3 that are emerging. One is, of course, the debottlenecking that we are doing in the existing complex itself. Then the other large addition that is coming up is the ammonia project, which is going to then help us reduce the raw material costs. And the third project that is coming up is a world-scale technical ammonium nitrate project, riding on the mining chemicals, the mining needs that are there. Coal, cement, infrastructure.
Yes.
So all 3 put together is something that we are seeing the next 3 years emerging as a very strong kind of a positive traction.
Right, and you've been making this point, Mr. Mehta, you want to gradually move into a specialty chemicals player. That's been the direction. But just to come back, you have that mall which is in the books of the listed entity in Pune. And part of the market wants you to go ahead and sell that. Because you could easily realize maybe 500, 600, 700 crores, you could be a better analyst on that. But any plans of selling that? Because it's a non-core asset, right? It's diluting your ratios as well.
Absolutely. So we were waiting for this COVID period to settle down on the real estate side.
Okay.
And then to look at how do we, look at spinning it off. But of course, it's a very, very small component of the total business, as you are aware. And as we look at things, if you see 3 fundamental aspects that have been vindicated through the quarterly and half-yearly results. Number one is, if you see very clearly that, despite this huge raw material price hike, we've been able to pass through. That's been one fundamental shift. Second is that the strong alignment with the India
Mr. Mehta, just to finish the point on this mall that you have, will you sell it or not?
Yes, we are considering.
All right. And what could be the rough value that you realize from this? We're running a little short on time, so just want to clear that.
So that would be somewhere, you're right, around 700 to 800 crores.
Okay. All right. Thanks so much for joining in.
Thank you.
Okay, so that's Deepak Fertilizers. Got a lot of good data from there. So let's do